So what we're reflecting here is that what is the realistic capacity. Hydro, for example, during summer, there are some run-of-the-river plants that are, that will not produce 70 megawatts because during summer, wala naman tubig, right? So it's probably just 10 megawatts during summer. So during this peak period, we just measure that. So that's the 12.5. You will not see this in any other percentage. This is a customized analysis that we have in our spreadsheets, etc. But roughly, you're seeing here that there's around 25% of reserves. That's a debatable number. The rule of thumb is 20% is more or less the reserve margin that you need. But when you have older plants, people can argue, maybe 30% is better, if you want resiliency, etc. But the economics will look very different if you have, you'll really depress the prices if you have too much reserves. ERC has a definition of what the minimum reserves should be. It comes out to just under 20%. It's, the largest unit times 2 plus 4% of the peak demand. So that's a quick formula. I'm not going to bore you with the details. But it comes out to close to 20%. We are above that. That's why I'm saying we are in a slight, maybe we are in an oversupply situation. Not extreme oversupply, but oversupply, more than adequate reserves. If we look at 5 years from now, or 4 years from now, and we just project a very simplistic 5-ish% increase in peak demand, your 10 megawatts becomes 13 gigawatts, 10 gigawatts to 13 gigawatts by 2022, peak demand. And we've been growing at that rate, roughly, 5-ish% historically. The supply from 12.5%, if you look at the power plants that are in actual construction, and we have a pretty good idea which ones are quote-unquote real, the ones that are fully funded, notice to proceed, financial close, they're actually building, not building, prior to the full EPC contract. So that's around 3,000 megawatts in Luzon. That includes 1,300 from us, the GN expansion. We're building a 2x668. The second unit, we just pushed the button last December. And a lot of it you'll know because of our view that we'll share with you, why we did that move. So what I'm saying here is, yes, today there's abundant reserves, but we have to also see the financing side. It is tightening. Times are not as good. Money is not as cheap as 5 to 7 years ago. It's still okay, better than 15, 20 years ago, but the tide seems to be turning. Not to mention the build program of the government, etc. It may crowd out private sector, right? A lot of people are now going to market and raising liquidity, right? There's a lot of stock rights offering, the banks are raising capital, etc. So, and interest rates have been rising. At the bottom of this cycle, a 10-year rate, government rate was about 3+%. Today, that similar rate is close to 6%. That's a significant delta between 5 years ago and today. 300 basis points, does matter. So the other reality is what we're seeing now is that ARCOA, which is retail competition and open access, which is one of the key features of the EPIRA law, the Power Reform Act. We're already seeing the impact. So today, the market is roughly divided into 2 parts now. You've got what we call captive customers. So any user that's below 1 megawatt, you have no choice, sorry, but you have to buy whatever your distribution utility, be it Meralco or FECO or what have you, procure at the market. You pay whatever price they negotiate for you. The other part of the market, which is the ARCOA, which is the open competitive market, for now open to 1 megawatt users and up, but that number will go down to the household when ARCOA is fully implemented. As to when, I don't know. No one knows really. It could be 5 years or 25 years from now. that market, the large users, are already enjoying really good prices. Why? Because if you have an oversupply situation, of course, competition becomes very stiff and you get the best price, especially in the short term. The caveat here is there's short-term oversupply, and therefore, if you have short-term contracts, right, the average ARCOA contract is about 2 years. Now, no one really writes 10 years and get a super price. No generator will give you. Maybe some, the more bold ones. But normally 2 years, fine. We can predict oversupply over the next 2, 3, 4 years, maybe up to 5 years. I'll give you a good price. Because I have to choose. Do I dump it in the spot market, which is also depressed, right? You've seen spot market numbers before in the previous presentations. I'm not going to bore you with more data on that. Or you lock in for 2 years, a decent price. It's not great, but at least you have certainty. That's what's happening now in ARCOA. You see the margin compression, you see the supply-demand really action coming alive. And then for renewables, there's a wait and see. The era of feed-in tariff is over. There's no new FIT except for the extension of the biomass and hydro. But now everyone's waiting for the next policy, and the Secretary just signed the Renewable Portfolio Standard. There's still a lot of questions around how real the execution will be, because the devil's in the details, right? Will it be really implemented, and will it be, because people can game it. Well, what are the penalties? Will it be enforced? What are the penalties if you don't comply, if you don't have enough carbon certificates to comply with the law? Do you get a slap on the wrist, or will people really comply, and will the government really mandate that and take it seriously, right? So these are some of the big questions that investors like us want answered first before we go and invest in renewables because of the so-called renewable portfolio standard. So again, those are some of the considerations. If you look longer term, because we need to look beyond 5 years in power, because again, my FINMA example took them 7 years and then another 3 to 4 years to build the plant. Power plants can take 10 years from scratch. If I decide to put a power plant anywhere in the Philippines now, I'll probably, for the first, brand new site, will probably take me minimum 10 years before I can see the first power being evacuated to the grid. So we need to look longer term. There are a lot of uncertainties beyond 2022. And we need to have a point of view on this uncertainty, if we are to make these major investment decisions. What will happen? Question number 1, what will happen to the 4 gigawatts of the Meralco plants? They signed 3.5 gigawatts worth, but the plants didn't get 100% from Meralco. If you add them all up, it's worth 4.5 gigawatts. We have some hypotheses. We believe that it will be spread out. It will not all happen at the same time. Some of them may fall away. Some of them may be delayed. That's our hypothesis. This is like looking into the crystal ball. Yeah. But leaving it vague enough so I can say, see, I was right. So, number 2, when will Malampaya decline? Okay, and how fast? That's a key uncertainty. Malampaya, where over 3,000 megawatts, that's roughly 1/3, 1/4 of Luzon's demand, 1/3 of Luzon's demand, is supposed to decline in sometime in the mid-2020s, 2025, but there's a chance that it will decline faster than that, because are they investing the right amounts in the gas field, because there's no extension, so, that's a big question, Uncertainty. Related to that, there's more than 3,000 megawatts of power plants depending on gas supply. If they run out, or when they run out, what will be the fuel supply? It's LNG. But where is the LNG? Is anyone building already for the 3,000 megawatts? Yes, you have one in Quezon, but that's another story. But what about for the 3,000 between First Gen and Ilihan? Where will they get the supply? LNG. Our hypothesis there By the way, for Malampay, our hypothesis is, yes, it will decline, but from base load, it is a wrong use. Gas is not supposed to be for base load, at least for a country like Philippines. If we can afford coal or geothermal, that's for base load. The gas ideally should be intermediate, and peaking. You're wasting precious commodity for that. But starting 2023, 24, 25, when these contracts with Meralco fall off, we believe that Malampaya will continue to produce, albeit at lower rates, and then the gas will be used for intermediate and peaking so that it will hopefully stretch a little longer than expected. Certainly longer than if you use it as baseload, right? So there will be a longer tail, hopefully, for the sake of the country. LNG will believe will happen. Come on, we have no choice but to build. I'm not sure if the big bold plans, I saw Gail's presentation, Gail's Puno, I also talked to Gail's, I admire their vision, of looking at this from an ecosystem perspective. But again, the question is it financially feasible? It's too bold and risky a move. It's too high risk, at least in our book. My hypothesis is that LNG will happen, but on a smaller scale. FSRU, the floating units are the cheaper, 500 megawatts, thereabouts, is what I'm hearing from industry experts saying. That's a good enough scale, not your 3,000 megawatt scale all in one go. That's too risky. Especially in a period where you still have some oversupply, and in a period where you don't know what's going to happen to the coal plants of Meralco and other coal plants. It's just too risky to make that big bet. Will renewables be able to scale up? Right? There's still a lot of issues. Yes, the future is renewables. I'm not sure if, at some point, maybe in the next century, it will be all renewables and no fossil fuel. Or it's mostly 80–90% renewables. But in our lifetime, certainly not in my professional life. I don't plan to work forever. But I think renewables. The goal of the government right now, renewables accounts for about 25–27% of the output. But a lot of that is with big hydro, big geothermal that was built in the 70s and so forth. DOE wants to take it, their aspirational target is 35% of output by 2030. Okay? Realistically, the way we view the market is there's not much geothermal and hydro opportunities. Yes, there are opportunities in hydro, but it's difficult, social issues, transmission issues, etc. Where we think there's going to be a large opportunity for renewables is solar and wind. But the challenge is we need around 15,000 megawatts of solar and wind to achieve that 35% renewable target by 2030. That's building more than 1,000 megawatts per year. Theoretically possible, but you do have constraints. Constraint number one is the grid capacity. Right now, without storage, forget it. You can't build thousands and thousands of megawatts. You're gonna, have frequency issues with the grid. So the holy grail of renewables is storage, but storage is still expensive. Maybe 15 years or 10 years if I were more optimistic. Because storage is still expensive today. It's like $500,000 per megawatt hour. That translates to about 2–3 pesos per kilowatt hour if you translate it to the storage cost per kilowatt hour. Even if you add it to 299 solar, that's 6 pesos. So, we're probably 5, 10, 15 years away from storage being comparable to conventional. I was also wrong with mobile phones, and I believe all the consultants in the 90s when people were saying the peak penetration of mobile phones was going to be 25% because it's so expensive, it's a luxury, etc. Guess what? Penetration has 150%, right? So never underestimate technology. 5 years, I wouldn't bet against that. I think it's going to be more than 5, but I'm not an expert. Experts say 5 or so years, but I'm hearing mixed signals from experts on storage. Storage is more applicable to off-grid areas where you're displacing expensive diesel. That works today, no doubt. But for large grids, 5 years, I think, is on the optimistic side. So that's a big question, how to scale up renewables, not to mention the land issues. 15,000 megawatts is around 15,000 hectares of industrial land. Industrial land is expensive. So you need to go agricultural, so it's more affordable. But if you go agricultural, it takes time to convert. How long will it take time to convert? You know, so that's the other question when it comes to renewables. That's the challenge. Looks good on paper with storage, but storage and land and the grid are the key questions. You know? And then, speaking of the grid, will there be adequate transmission? You know, us as generators, we plan, we build as if transmission is there. But they're not always there. We built our wind farm in Ilocos, and for the first year, for the first high wind season, we were curtailed. You know, we lost 20% of our annual production, more than 20% of our annual production because the grid wasn't upgraded in time. That's the risk that we took, you know. So, you know, our hypothesis there is there are some areas, right-of-way is the key issue here. It's not the funding. NGCP has a good balance sheet. ERC has approved a lot of their major projects. It's the right-of-way. In a place like Cavite and Batangas, it's very, very difficult. It's going to be expensive and difficult, right? So upgrade of the transmission line there is going to be tough. But in a place like Bataan, where we are, difficult. So it really depends case by case. So anyway, we do take all of these 5-10-year uncertainties, but we also have some fundamental, almost philosophical questions in terms of our view on the industry. Should we start changing our view from this is about long-term PPAs and project finance to more on, no, this is like telco. Telcos are high capex. They don't have long-term PPAs with their subscribers. No, the longest is 2 years, right? They give you a free phone and then they lock you in for 2 years. Ganun din yung retail competition, you know. So yeah, I mean, or should we start thinking of, this is more of a merchant market. In fact, international investors already view us as merchant markets. We talk to a lot of strategic investors who divide Southeast Asia into, or the world into 2 categories. The utility markets, like Indonesia and Vietnam, where you have long-term PPAs with a government company there, like Napocor before. And you have merchant markets like Philippines and Singapore and Australia. Wow, nandun na pala tayo. So we really need to shift our business model. And again, this is all the relevant policies. I don't have time. I'm getting a cue card now. There's relevant policies to really shape the future of this fundamental issue. No. ARCOA is the retail competition. When is it that we will go to the household level? CSP, the competitive selection process. I was with Secretary Gatchalian and Yusek Posadas yesterday in a forum in Marriott, and I really emphasize the need for speed in terms of passing that bill. To me, it's the most important bill with respect to energy, the competitive selection process, because that's what we need to bridge today and the full retail competition. No, because there's a lot of doubts being cast on Meralco and other utilities that, you know, Lian, for example, was questioning Meralco's, it's very public now, the first gen's offer of 414 megawatts of gas, right? But if you have the CSP where, you know, it centralizes a third party, wala na yung mga doubts na yan. We'll just go ahead and there's no, you know, delays. No, so to us, it's a very critical bill because if we don't get our act together, what will happen in 2023? No, so that's very important. And then the other one is fuel and technology. What will be the winner? What will be setting the long-run marginal cost? Because that is a very important thing for us to decide. It's like again during the telco days in the 90s. Is it gonna be, what technology do you hang your hat on? Is it GSM? Is it CDMA? You know, Globe shows, right? Remember before, yung smart, hindi ka pwede mag-text dun eh, analog. Globe went for digital and that, you know, so it is an important, but Smart was able to shift, no, when it saw na, uy, mali pala yung, digital na pala yung mundo, diba? So in power, it's the same thing. Which technology are you gonna hang your hat on? Well, to us, these are all, you have to hedge. You cannot have one answer, one solution for everything. So we believe in diversification, portfolio. Okay, that's the beauty of power. Unlike telco, you can't really have too many technologies, no, back in the days. But here, we want to further expand our coal plants. Yes, we're Ayala, we care about sustainability, but part of sustainability is price competitiveness and reliability. We believe that there is still a role for coal and gas for that matter. So we will continue to invest in a responsible manner, no, for coal. It can be managed responsibly. Gas, we are exploring for intermediate and peaking, but again, relatively modest scale, not the large 5,000 megawatt type scale. We'll continue our investments in renewables. No, we're continuing to develop sites both in solar and wind. And very important, we're also piloting our capabilities in storage because that is the holy grail for renewables. Even if it's expensive now, we are going to build our storage facility just to learn. No, it's a small investment. It's less than 1 megawatt hour. No, but we want to learn. The pioneer here is AES. Is already doing it. So, we will also do it because this is the future. And then geographic diversification, at least for us. The Philippines is getting tougher and tougher, given this picture, right? But we're still here for the long term. I get a lot of questions. Are we getting out of the Philippines? Of course not. No, this is still our home market, our key market. But a lot of this is going to be taking a long term because I'm not going to build another big conventional plant over the next couple of years, right? We have plans for renewables, but in the meantime, we have a lot of capacity to do other things, and there are markets like Indonesia and Vietnam are key target markets who are still in this utility model. So by taking more and more merchant risk here in the Philippines, we're able as a portfolio to manage that risk by taking long-term PPAs in Indonesia, Vietnam, so it complements. So at least that's the theory, that's our strategic rationale for why we are also going regional. And again, I was discussing earlier that as a foreign investor in Indonesia and Vietnam, we will only invest if we have a really good local partner, right? Because we're taking on sovereign risk, we mitigate that by choosing the right partner. So, and then my last 2 points is, a strong balance sheet and multiple sources of funding is the name of the game when it comes to a more competitive market. I cannot underemphasize the importance of having a very strong balance sheet that should be able to withstand 2, 3, or 4 years of really bad market where you have oversupply and depressed price. If you don't have a strong balance sheet, you're dead. And a lot of these things happen already in merchant markets like Australia, Singapore, etc. Balance sheet becomes a very, very critical factor. And then last but not least, cost competitiveness. This is when we first entered in this market, there's one thing that the Ayala board gave a mandate to us, which is in any investment that you make, or in most, there may be a few exceptions, but it should be exceptional. You have to be the most competitive cost plan. And that wisdom is carrying us through this era of open competition. Because juxtapose that with the utility model. The utility model doesn't really care about cost competitiveness. They care about reliability. And the irony is, it's not a critique. Well, maybe it is a critique, but it's a balanced critique. The utility model is, as long as you have a power plant investment, even if it's a 20% more expensive than a benchmark, a Chinese-built power plant, it's okay. Why? Because as long as you're getting reasonable returns, right? Like, 15%, 13% return, ERC will approve that because that's the methodology of ERC. It's a reasonable rate of return on your investment, right? So the more expensive your plant is, and expensive I don't mean overpriced. It's expensive because it's a BMW. It's more reliable. It's not, non-German car, right? That could break down. So why, if you had the choice, diba, you're a car service, you'd rather go for the BMW because the way you get compensated is, let's say, a 15% return on the 10 million or 5 million pesos that you'll spend on your BMW, right? If I'm the investor and the regulator views it that way, dito na ako sa BMW. I love driving a BMW and earning 15% on a BMW that's reliable, hindi siya magbe-breakdown. No, especially in Germany, dito nagbe-breakdown kasi humid, lubak. Anyway, but that's my point. That's the utility model. They incentivize reliability. Yung binabantayan lang dyan is a reasonable rate of return. So if you're an investor, I love that. Ayoko ng sakit ng ulo running a Chinese plant. But no, why did we go into Chinese plant? Because they're more cost competitive. Yes, sakit ng ulo. I will admit that. We struggled in availability on the first year, first 2 years. But after that, once you get it right, you're the most competitive. We take the risk because, again, the directive to us is cost competitiveness. Reliability, you make it reliable. You work for it. So that's the difference. And now we're proud to say that we are one of our core competencies, aside from partnering the right way or the best way we can, we also know how to work with competitive cost contractors, especially the Chinese. And we have ways to mitigate that. Because we just choose our parts. So yung engine namin, yung turbines, yung generator, made in Europe na. Pwede naman yan eh. So it's a little bit more expensive than a pure Chinese plant, but that's a sweet spot. So that's what we're doing. That's how we're de-risking and be cost competitiveness and be reliable at the same time. So those are some of the considerations. I said too much of our, I hope I didn't say things that are confidential, and my friend here is from Meralco, but I trust that this is on the spirit of learning as opposed to copying each other's strategy, but we're too small for them to copy, so I don't mind spilling the secrets. There's no secret sauce. It's it's all obvious anyway for industry players what we're doing. But I hope. I'm sorry I went a little overtime. I told you I have 6 slides, but the rate I speak, it's 15 minutes per slide. I should have prepared just 3 slides. Next time I will cut it into half. But it's a fascinating story. It's a very exciting, dynamic industry, and our company has really gone through a lot of good things, a lot of challenges, but a lot of good things. And there's just so many insights to share. So I hope that it was helpful to you.